Hello traders. Today we want to talk about CCI settings that day traders should know. All right, this is my favorite setting for the CCI for day trading. All right, so we will be talking about CCI setting that day traders should know. Though we are talking about day traders, scalpers can also use this setting. All right, let's get started. The setting that we are talking about is CCI period 8. So the role of the CCI period 8 is to measure the deviation of the price in relation to the moving average 8. So when you are using the CCI period 8, is like one is using the Bollinger Band, okay, 8 volatility 2, Bollinger period 8 volatility 2. So there is a similarity between the commodity channel period 8 and the Bollinger Band 8 volatility 2. So this is my favorite setting for the CCI, the commodity channel index, for day trading purposes. All right, so period 8. So I will recommend to day traders to use that setting on the hourly time frame. Though we can use it on a 1 minute time frame, on a 3 minute time frame, on a 5 minute time frame, on a 15 minute time frame. Okay, I will prefer that day traders use the hourly time frame. So what are we looking for? We want a CCI period 8 to reach the zone of 200 levels. So for the overbought, we want a CCI period 8 to go up to the zone of 200 level. All right, and for the oversold, CCI, we are looking for the CCI period 8 to reach the zone of negative a 200 zone. All right, so you can see here on the hourly time frame, many times, the CCI period 8 on the hourly time frame has reached, the 200 level. All right. Those are the points where we want to look for, trading setup. We want a CCI period 8 to form the hook, something like this. So you see here how it went up to the 200 level, and we want it to start changing direction. So you'll see the CCI period 8 goes to the level of 200, and we want it to do something like this, to form a hook like this. All right. Once that candlestick bar that has formed this part of the hook, all right, you see here this session of the CCI is completed, we have a bearish trading setup on the hourly time frame. Then we will implement a top-down trading method. For the oversold condition, we want the CCI period 8 to reach the oversold zone, and we want it to form the hook. To change direction like this. And once the first hourly candle that is forming this session of the hook is completed, we have a bullish a trading setup on the hourly time frame. Though I'm using the hourly time frame, I want to remind traders that is valid on all time frame. Even a swing trader can apply this on the daily chart when the CCI period 8 reach the 200 level and then form a hook. The hook means that they change direction like this. And once that candlestick bar that is forming this section of the hook is completed, we have a bullish pattern. And in this case, once this is completed here, we have a bearish trading setup. All right. One more thing, traders. When we are trading, we don't want to repeat the 6 biggest trading mistake, i.e., we want to align our strategy with the market patterns. There are 3 market patterns: the rising channel, the declining channel, and the horizontal channel. So this strategy of using the CCI period 8 for day trading purposes is valid when the price is consolidating. All right. So when the price is consolidating in a horizontal channel like this or in a triangle, we are ready to buy on the lower part of the consolidation, looking for the bullish setup for the CCI period 8, and we are ready to sell on the top of the consolidation, using the CCI period 8 that is forming the hook like this. All right. We can also use the CCI period 8 for day trading if the financial instrument is in a rising channel. All right, here it is, it's in a rising channel. All right. In that case, when the price is in a rising channel, we will concentrate only on the oversold trading setup. So we will ignore the overbought, though sometimes a more experienced trader can trade also the overbought condition in a rising channel. I'll recommend to trader that when the price is in a rising channel, that one should focus only, one should concentrate only on the oversold, CCI 8. All right. So here you can see that the price was in a rising channel. Here it is. We are looking for the time when the CCI period 8 formed the hook. Here it is. See here, it touches the minus 200 level and form the hook. So you want to know which candlestick bar form the hook. Once that hook is formed, we have a bullish trading setup. Once again here, this was a big trick. You can see that after this candle here, it pierces. You see, went all the way down here, while the CCI reaches the oversold zone. But by the time the hook is formed, it was too late. Well, you can see that the price quickly returned back. So the candlestick bar that is forming the hook here, completing this section of the hook, in this case, is this one here. It was too late because the price went down all the way here, forming the long candlestick bar. By the time the hook is completed, the price is already there here. So we will ignore it. So if the price form the hook, so to filter out false oversold in this case, if the price form the hook like this, all right, but the price already went up, we can ignore, the setup. So here it is, you can see here, this candle here was the one that brought the CCI to the minus 200 level, but the second candlestick bar is the one that is forming the hook. This is the hook, color the hook into red, all right, that is forming the hook, all right. By that time, the price already went up big time. We can ignore that oversold because it was too late. It's already gone. Don't trade it, all right? Here again, you can see that it was oversold, reaching the minus 200 level. And after that, the second candlestick bar that is forming the hook is this one here. It went up just a little bit. So this is the second candlestick that formed the hook. After that candlestick bar is closed, you see that the price went up just a little bit because, you see, it went up already. If it went up already, ignore the setup, all right? Here you can see that this is a beautiful signal. The price came to touch come very close to the minus 200 zone. And the second, so this is the candlestick bar that has pushed the price, this one, pushed the price to the oversold zone, minus 200 zone. The second candlestick bar, this one, is the one that formed the hook. All right. After that, we can draw a line at the high of that candlestick bar. I'm talking about the second candlestick bar that is forming the hook. This is the one that formed the hook. After that candlestick bar is formed, we will now implement a top-down trading method to trade it. So one strategy, for instance, from the 3-hour time frame, one can go to the 3-minute time frame looking for entry. So we can use 2 time frame for this method. Setup is on the hourly time frame. We go straight away to the 3-minute time frame for the entry. You want to work with it. So with every trading method, you want to practice first before you go live. Don't go straight away using real money. Use a demo account, practice, and see how the method works in real time. And then from there, you have now the skill. Practice first, and then once you gain the skill, you can start trading it. Okay. So attention to the market pattern. So if you have horizontal channel, we can play it both ways, overbought and oversold. But when we have a rising channel, it's better to use, this is a good one here, see here. Okay, so the candlestick bar that brought it here, touching the oversold zone. After the second candlestick bar, we use a top-down trading method, go to the 3-minute time frame or 5-minute time frame, and enter the trade, and then it went up. Very simple. This is my favorite setup for day trading using the CCI period 8. I recommend to day traders to use the CCI period 8. That is measuring the deviation of the financial instrument in comparison to the moving average 8. Very powerful. We can apply the same strategy if we are looking for trading setup for swing trading. For instance, if we go to the First, let's go to the 50-minute time frame and see how this can work. So what are we talking? We don't want to violate the market pattern. So here you want is for scalpers. Okay, here. Look at this one. Okay, right, pulling back to retest the lower part of the channel, and then after that, it formed the hook. After the second candlestick bar, and then there it is. It starts going up. All right, very simple and also very powerful to pick the oversold zone. Okay, in a rising channel, to pick the overbought zone in a declining channel, and to pick both the overbought and oversold in a horizontal channel. If you go, for instance, try it first, see whether this is suitable to your trading style. Because some traders may say, oh, this doesn't suit my trading style. That's okay. But try it first and see how this will work for you. So here you see on the daily chart, here it is. It touches the lower part of it. Okay, it touches the minus 200 zone. You see a period 8 touches the minus 200 zone. Now after that we have the hook. Okay, this candle here, you see this one. Let me draw some line there. So this is the first candlestick bar, or is it this one? No, okay, this one. This is the one that pushes the CCI period 8 to the oversold zone, and then after that, the second candlestick bar that form the hook is this one here. All right. Now, in this case, you can see that the price did not go down straight away. As a swing trader, it's compulsory to use a top-down trading method. One more time, you will notice that here, what has happened here. So this is what we don't want traders to do, because when we are talking about technical indicators, traders very often will concentrate on the technical indicator instead of paying attention to the price. So what has happened here, though the CCI period 8 reached the oversold zone, you see that what has happened, the price break below that key, which is a resistance here, and resistance here. The price break below that resistance level, 6206, and then it retests with this candle at the point where the CCI period 8 was forming the hook. All right, you see that? So for swing traders, when the CCI period 8 reaches the oversold zone, all right, the minus 200 level, what I will recommend to you, to those who want to use it for swing trading, to wait for the common central line at least to be broken. That will help you to filter out false trading setup. Okay, so wait for the common central line to break. So here you see it touches here. So the first candlestick bar push it to the minus 200 level. Now be patient. Wait for the common central line to be broken. This is it. This candlestick bar here. Okay, this one here. After that, implement a top-down trading method to trade it up. All right, it's very simple, but also powerful. Okay, to find excellent trading setup. As always, when you are using a technical indicator, the best way to use any technical indicator is to use it in conjunction with the market patterns. So here you can see it was a declining channel. So the best scenario is to look for the overbought on the upper side of the declining channel. Okay, that would be a better scenario, a better strategy instead of trying to pick the bottoms. All right, so anytime the price is in the declining channel, you are buying. It's a contra trade, it's a risky trading. All right, and as always, for every trading method, it is critical that one use at least 2 time frames. One time frame for the setup and another time frame for the entry, at least. Okay, but generally when we are talking about multiple time frame trading method, we are using 3 time frames. The first time frame for the setup, the second time frame for the signal, and the third time frame for the entry. Okay, so have a look and see whether this will make sense for you. But as always, remember that you are not trading a CCI like a automated trading system, because a lot of traders in fact are looking for trading robot. Okay, buy, sell, buy, sell, buy, sell without any work. The best approach is to understand the language of the price and not to violate the market pattern. All right, at least the common sense trend has to be broken. All right, if you want to buy or sell, all right, that strategy will work. Here you see it was sold. Common center is broken. First bullish candlestick bar. Implement a top-down trading method. Here it is again. You touch it here. Here it is. Okay, for those who want to use it for swing trading. Now wait for the common center line. okay, to be broken. So common sense trader will be something like this. Here it is. And then after that, implement a top-down trading method. You want to buy at a support level. Always. Where are the support level? So the common sense trader is kaput. Okay, see here, try to retest this support level. If you focus only on the technical indicator, so buy, okay, you're going to make a lot of mistake, which is what a lot of traders are still doing. We do not recommend that to traders. The price is the number one indicator, and never violate the market pattern. So if you see a rising channel, focus on oversold. When you see horizontal channel, you can focus on oversold and overbought. If you see any declining channel, concentrate only on overbought setup. That will help you or improve, okay, your CCI trading strategy. All right, but if you just say, okay, this is very simple, CCI period 8, on any time frame, you are doing your own thing, that won't be a good strategy. So here it is, here on a 30-minute time frame, CCI period 8 reached the 200 level. Okay, all right. I'm looking for my vertical line. It reaches the overbought, the minus 2, the positive 200 level is overbought. You want it to form the hook. You remember? One candlestick down. So the doji here on the 30-minute time frame is the one that formed the hook. You remember? So that's doji from the hook. Now after that, implement. So you are a 30-minute time frame. You can go to the 3-minute time frame for entry. And here it is. Now after this candle and the second candlestick bar, now the hook is formed. You want to make sure anytime you see a bearish trading setup or overbought, ask yourself, is the overbought in a resistance zone? All right? At least. So there was a resistance here. It's a resistance. Good. The resistance zone. So I want to sell at least in a resistance zone. Okay. If there is no resistance, or instead the price break above a key level, retest it, you know that it's a fake one. You don't want to sell in that case if the price breaks above a key level and retest it. Though the hook is formed, and the CCI period 8 is overbought, if here we have the price breaking above that key level 62, 68, and the hook is formed with another candlestick that is retesting that key level, that will be a buy instead. All right, so do not use it as an automated, as a trading robot. Use it as a trading system where you are in charge of the decision. You are looking at what is happening, you are analyzing the price, and you want to sell. You want to sell at resistance level. You want to buy at the support level. You are paying attention to the market pattern, rising channel, declining channel, horizontal channel. So here this was a good one on the 30-minute time frame, and you roll it down nicely. All right. Here again, if you look carefully, the CCI period 8 reaches the 200 level. So 30-minute time frame also is very good. You can see it's working nicely. Phew. Now we see it reaching the 200 level again. We see we want it to form the hook. So this is the reason why I'm repeating that word hook. Traders say you are repeating yourself too much. It's because I don't want trader to forget it. Some trader may get it straight away, but the reason why I'm repeating that word hook. All right, it's not to annoy traders. It's because it's so important that the CCI period 8 form that hook. All right, are you getting it now? All right, so if it touches the 200 level, it will be like this. Okay, the second, you need two candlestick bar. One that is pushing it to the 200 zone, and the second one that is forming the hook. Once that is completed, you have your trading setup in place. Now, if it's a bullish trading setup, ask yourself, is he in a support zone? Yes, this one also is in a support zone. So here it is. See here, we have horizontal channel. The price was oscillating on the 30-minute time frame. So we are not violating the market pattern, and the price is at a support level. So buy at a support level and do not violate the market pattern. And here again, look, beautiful. It went up. For day trading, this is good, yes or no? It's good. Now here it is, the CCI at this point in time. Here, look at this one. Okay, look at this one. Okay, it reaches again the 200 level. Where are we? Pay attention carefully. See what's happening here. Analyze what's happening so you can filter out the false signal. So which candlestick? This is the one that pushes it to the 200 level. The second candlestick bar that formed the hook is this one, the tiny one next to it, next to the vertical line here. Okay, if you do not use at least 2 time frame, you'll be surprised. Here, you see that the price did not go down. It didn't go down. You see, it did not go down. Is that one above the high of that candlestick bar? So anytime the candlestick bar that form the hook, okay, you want to sell, very simple way to sell common center line to be broken at least. Here, the common center line is not broken. It stays there, stuck, intact, okay? So you know that, okay, common center line is not broken. I'm not selling yet. All right? But you see, the CCI period, it was over about too early. But finally, the common center line is kaput now. Now it's kaput here. Okay? But the price is going up. Okay, it's at the top of the consolidation, which is a resistance zone. It went down a bit near the median line. This is what has happened here. Near the median line, I move this line a little bit down. You can see that it's the median line of that horizontal channel. So you just roll it down near the median line. So if you are selling at the top of a consolidation, first target, median line, ultimate target, lower part of it. So you just change the direction again. And look at this one here. Will you agree? This is again reaching the minus 200 zone. Now, which candlestick bar? So you want to know which candlestick bar. You need two candlesticks. One, push it down. So which one? This one? Is it this one or this one? Yeah, this is the one. This is the candlestick bar that push it to the 200 level. Always ask which one is this one. Okay, push it down. Now, which one is forming the hook? All right, this is it. So the second one is forming the hook. So therefore, is he in a support zone? Yes, he was in a support zone because it's near the median line or the horizontal channel. If you want to be patient, you can just draw a line like this. Common center line. Now it's kaput, breakable, retest. So you can be patient maybe after this candle, and then you take it from there. Resistance ahead, it's a tricky one here because there's a resistance ahead. So you may be a little more patient and say, okay, maybe you may say, I don't want to trade this one. It's near the resistance zone. I will not trade this one. I'll prefer to buy above the resistance zone. Look, it breaks above it and try to retest it here. So now the price breaks above. If the price breaks above a key level, you can be patient. Okay, and now here it is. Try to retest it, break above, retest, turn around, boom, it gap up, run away. All right, you see now? You run away, all right? See, this was going on all the time. Now, here we are. He's saying it reaches the oversold zone. Okay. All right. I will not trade this one. Okay. I will not trade this one yet. Okay. I will not trade this one. Okay. Because it is, you see, the hook is already formed, but I will not trade it yet. See, there's a bearish trend like this. So if you want to buy this one now, it will be better for us. So you draw that trend line and you can switch to your 3-minute time frame. At least you want it to break above. So though the CCI said to buy, we are not using an automated trading system. We are using a trading system. And as a trader, day trader, we are the one making the decision. And we are the only thing that we are following is the price. We prefer it to break above that level and to retain that trend line and to give us, okay, the first bullish candlestick bar, and then we draw a line at the high of that candlestick bar, and then we use at least 2 times frame, okay, to trade it, all right? Gently, 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 all right? So, very, very important. It's very simple. CCI period 8 is my recommendation for day traders, all right? But I'm not saying that that's the only setting that you should use, okay? But personally, I like that setting, period 8, because we are measuring the deviation, okay, in relation to the moving average 8. The moving average 8 is highlighting the short-term trend for us. So any deviation for the moving average 8, you'll see that very often if you place moving average 8 from the price on a chart. If the price deviates too far away from the 8, it has a high chance to return back to the 8. It's going on. So financial instruments that are going very, very fast will stay around the moving average 8. Deviation from the 8, pull back to the 8. Deviation from the 8, pull back to the 8. So therefore, we can use the CCI period 8, which is almost equivalent to the Bollinger Band 8, volatility 2. But in all cases, we are looking for a trading setup, a day trading setup. CCI period 8 reaching the level of 200, positive 200 or negative 200. All right. If it is a bullish trading setup, we want it to be at a support level. So if it's in a rising channel, we want it to be on the lower part of the channel. One easy way to know that, okay, a bullish trading setup is ready, we want at least the common center line to be broken. And we want to use at least 2 times frame For this method, we can find a setup on an hourly time frame, 30-minute time frame, and then we go to another time frame to enter the trade, either for day trading or for scalping. All right? Check it out. See whether this is suitable for you, whether it makes sense for you. But as always, when you are using this type of momentum oscillators, the momentum oscillator is about the speed. So you want financial instruments that are liquid. All right? Don't trade financial instruments that are not moving. Sometimes I see some traders trading some stock, and you see the chart, there's no movement at all. You can use momentum oscillators for stock that are not moving anywhere. You'll see the price gapping, and you see all these kind of things on your chart, and you wonder how come people can trade it. So be aware of that trader. Stock that are moving, or indices, gold, silver, currencies, those things are moving, and you want to trade them during the first 2 hours when the market is open. Remember that it's quite challenging for day traders to day trade from the 1st to the 8th of the month, and also between the 15th to the 20th of each month. So take it from there, try to adopt a disciplined approach like a pro, and use the CCI 8, and let me know how you find it in the comment section. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. I will be posting a live day trading video using the CCI period 8 to demonstrate to traders how one can use the CCI 8 for day trading. So be ready for it. I'll be posting a live trading video, day trading video about the CCI period 8, and I'll show traders how I use it in a live chart, so you may also learn from it. As always, we wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about CCI setting that day traders should know. Happy trading to you all, and speak to you soon.